Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started. Good morning. Today is Tuesday, July 6th, 2010. Welcome back to the markets from the long July 4th holiday celebrated here in the U.S. Markets were actually closed yesterday on the 5th in observance of the holiday. But now we're seeing this morning the markets are coming out with a little bit of a bang here as appetite for risk has increased dramatically. What we're taking a look at right here is we're looking at the Aussie USD pair on a 1-hour chart. As you can see, it's pretty much held that area of support at 83, and now we're on a nice move higher. Overnight in Australia, they had their rate policy meeting, and while they kept rates steady at 4.5%, which is currently the highest of all these major pairs that we trade, okay, they did say the consumer spending and business investment are expanding, and they may be in the middle of a housing bubble. So this is leading the market to believe that perhaps they're not going to be done with rate hikes here for 2010, as we may have thought just last week. Now, last week we're coming off some selling in world markets. We had stocks down, commodities were lower as well, and today we've got some risk appetite back on the table. Now, we've got U.S. Stock market earnings coming out next week, so this could be setting the table. This is a light week for news here, and all the news we've been getting as of late has been pretty bad. So with the lack of opportunity for bad news, the market appears to be in a little bit of risk-taking mood. So now we can just take a look here. Basically, the market's performing. It's a classic risk day, precisely as we thought. Aussie's doing the best, followed by the Kiwi, followed by the Loonie, followed by the Euro, followed by the Pound, followed by the Dollar, followed by the Yen. So that's sort of how this thing works. When I talk about the risk ladder, the way I have it set up. So that's what you would expect on a classic risk-taking day. We can just take a quick look here at the Kiwi. The Kiwi's also higher, despite the fact that business confidence figures have fallen as domestic demand slowed. But nevertheless, the market's betting that New Zealand's going to be the next to raise rates, more so than Canada. As you can see here, we're just looking at the Kiwi versus the Loonie here, and it looks like it's actually giving back a little bit of gains this morning. But Loonie's higher. I've got a bit on oil prices. They've been down 6 days in a row. And Canada's going to have their employment report on Friday, so that's going to show whether or not their economy is improving. Now, my guess is that their economy is improving. They've got nice, steady growth going on in Canada, which is a good story. So I expect we'll see decent numbers there. We've also got the Euro higher, got as high as 126 earlier versus USD. Now, they're coming out with stress tests in their banks. That's due out not next week, but the following week. And this is set to provide transparency to the market. And, policymakers over there are banking on the fact that, that the banks may not be in as bad a shape as everybody thought. So we're going to have to see how that plays out, but that's going to be a major risk theme, not next week, but the following week. Tomorrow we've got EU GDP figures, and we have CPI figures to follow on Friday. Real quick, pound's also higher, what we'd expect here on this risk-taking day. UK rate policy decisions due out on Thursday, but they're not expected to make any changes. Now, the market's still reacting favorably to the UK budget, so this bodes well for the pound. And lastly, just look at dollar yen here. Dollar's higher, yen's lower. People are reestablishing carry trades this week as risk appetites return to the market. Now, overnight, the Nikkei average was up higher, took a bid from Chinese stocks, which are also higher as well. So, as you can see, this is just a classic risk-taking day. Money's looking to come back in after the long holiday. The fears last week, things didn't look so hot. All the news was negative. But now we're hoping that this week things are going to be better going into earnings next week, which the market's hoping are going to be pretty good. Now, we have to sort of prepare ourselves for the notion that, hopefully we're going to continue to get growth, but it's just going to be slower and more steady than it has been in the past. You've got all these countries around the world that are enacting austerity measures to try and take care of their budget situation. And as long as they can keep growth going, it doesn't have to be tremendous, but just some growth, it's going to be a positive for world economies. So, that's sort of what we're looking at today. And that's, one of the nice things about the currency market is that, as people sort of jockey and decide where they want to put their money, bonds and other fixed income investments investments are paying little to no interest right now, so stocks get a major bid from that. But one of the other markets that always does well, regardless of what happens, is the currency market, and that's one of the reasons why I trade it, because we say that there's always a bull market somewhere in the currency market. Whether it's risk taking or risk aversion, there's always going to be something that's going up. And what this does is it allows you to diversify away from your normal investments, say U.S. stocks or bonds or things of that nature, and it really gives you exposure to different regions around the globe. So that's one of the reasons why we invest in the currency market and why it's one of the fastest growing financial markets out there today. So if you haven't had a chance to get involved in currencies, I encourage you to take a look, because there's no certainties going forward, especially with the global economic climate we have now. But just know that if you were in currencies, that you could always find something that was going to make you money. So that's what we've got for today. Light week for news. Got risk appetite today. I don't see anything on the docket that's going to turn this around. So we'll have to see if we get a pullback and still trade higher, or what's going to happen today. So good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.